I mean, I don't think that Bitcoin scales by $22 transactions. You know, half the transaction, the average transaction size is going to go to 2,000, then 20,000, then 200,000, then 2 million, then 20 million. Maybe at some point you'll see, you know, the smallest transactions are, you know, million fiat terms. I mean, in Bitcoin terms, who knows? But you'll see the transactions get much larger on the base layer. You'll see the fees will go up. The block rewards will go down. 95% of the economic benefit from the arrival of the ETFs has gone to the Bitcoiners that don't have ETFs, that disagree, right? If you disagree with the ETF, if you think that's a bad idea and you didn't buy one, you made 20 times as much money in the last 5 months as the people that disagree with you and bought the ETF.
Welcome to our channel. Today, we're diving deep into a fascinating analysis by Michael Saylor. Michael Saylor's discussion starts with the concept of self-custody among Bitcoin maximalists. These individuals and entities, particularly those holding large amounts of Bitcoin, will continue to self-custody their assets on the base layer. This segment of the Bitcoin community is committed to maintaining direct control over their assets, emphasizing the importance of decentralization and security in the Bitcoin ecosystem. Saylor predicts the emergence of a vast network of Bitcoin banks. Entities like Cash App, Fidelity, Coinbase, Standard Chartered, NYDIG, and Anchorage are poised to become major players in this space. These Bitcoin banks will offer a variety of services including trading, yield generation, credit, and custodial solutions. With the potential for tens of thousands of Bitcoin banks, the ecosystem will see an increase in services tailored to different needs and preferences of Bitcoin users.
What you're going to end up with is a set of entities that self-custody on the base layer. The OGs, you know, Bitcoin maximalists, especially the ones with large amounts of Bitcoin, and they will self-custody. Then you will see a set of Bitcoin banks. Cash App is the Bitcoin bank. Fidelity and Coinbase will be Bitcoin banks. Standard Chartered and other custodians, NYDIG and Anchorage, they will be Bitcoin banks. You'll probably see 10,000, 20,000, 50,000 Bitcoin banks, and they will be exchanges, custodians. They'll start to offer other services, maybe trading, maybe yield, maybe credit, or maybe just buy, sell, and custody. But you'll see them, and then, you know, how will the scale? Well, you can send Bitcoin cash tag to cash tag right now, and it's instant and free, and you'll see a lot of that layer 3 custodial transactions going on. But when there's 50,000 or 100,000 Bitcoin banks, they will want to transact high speed with each other, but they probably won't go to the base layer. They'll probably go to a layer 2, maybe a Lightning. And so you'll see a lot of layer 2 protocols, Lightning being the obvious one, where people open up channels, and you'll see a layer 3 to a layer 3 do high frequency final settlements or settlements with a layer 2. Maybe I want to do 100,000 transactions an hour, you know, in a channel system between 42,000 counterparties or 11,000 or something. So I think you're going to see a growth in layer 2s, a growth in layer 3s. You're going to see the transactions on layer 1 get bigger. I mean, I don't think that Bitcoin scales by $22 transactions. You know, half the transaction, the average transaction size is going to go to 2,000, then 20,000, then 200,000, then 2 million, then 20 million. Maybe at some point you'll see, you know, the smallest transactions are, you know, million fiat terms. I mean, in Bitcoin terms, who knows? But you'll see the transactions get much larger on the base layer. You'll see the fees will go up. The block rewards will go down. Right? there'll be an explosion in layer 2 options. There'll be an explosion in layer 3 options. One day you'll get to the point where, if everybody with an iPhone can buy, sell, and send Bitcoin instantly on the iPhone, right? You might see 1 billion transactions a day on that layer 3 network. And how will that integrate with Google and everything else? Who knows? I think there'll be layer 4s. One way that the Bitcoin is scaling right now is with the ETFs. So what is an ETF? An ETF is wrapped Bitcoin in a way. It's like I can send you a share of IBIT, and they're moving $500 million to $1 billion a day in transaction fees. So you're talking $250 billion or $300 billion a year in transactions in the IBIT network. Okay, so if I said I got an app and people are going to do $300 billion of payments on it, you would think that's scaled. Well, it is scaling. And people would say, well, some people don't like certain types of scaling. They'll be like, there are Bitcoiners that don't like the idea that there's money flowing into ETFs. But what I would say is 95% of the economic benefit from the arrival of the ETFs has gone to the Bitcoiners that don't have ETFs, that disagree, right? If you disagree with the ETF, if you think that's a bad idea and you didn't buy one, you made 20 times as much money in the last 5 months as the people that disagree with you and bought the ETF. So if your enemy just gave you 20 times as much as they just got and everybody benefited, are they really your enemy? Right? It doesn't seem like it, right? Bitcoin went from 30,000 to 65, 70,000. All the people that don't like the ETFs are the beneficiaries. 95% of the Bitcoin isn't in the ETFs. In fact, if you look very closely, I think, there's maybe 1 million Bitcoin in the ETFs, but there was 650,000 Bitcoin in Grayscale before the ETFs. So there's probably only net 1%. 1% of the Bitcoin has net flowed into the ETF, but the price of Bitcoin doubled, which is worth $700 billion. So if I were looking at that, I could say, well, it looks like $693 billion of economic energy went to people that hate the ETFs because of the ETFs, right? So you see, it's not something to fear. Yeah. Right? Not on a basic level, but they would say, but wait a minute, they're centralizing. Well, 1%. 1% of the Bitcoin supply is it really centralized? 1% is split between 33 ETFs that didn't exist other than Grayscale. So there was Grayscale that had 650 Bitcoin, and now there's 34 ETFs, and they've actually decentralized because most of the Bitcoin in Grayscale went into BlackRock and Fidelity and other places. So it's one of the reasons I say you need to be humble. Don't think you understand Bitcoin better than Bitcoin, because it's not clear to me that the ETFs aren't decentralizing the network.
ETF also address the problem of custody. For many high net worth individuals and institutions, self-custodying large amounts of Bitcoin presents significant risks. The fear of theft or loss is a considerable deterrent. ETF, managed by reputable financial institutions, offer a safer and more convenient alternative, ensuring that Bitcoin investments are secure and compliant with regulatory standards. Compliance and capital controls are another area where ETFs shine. Many institutional investors, such as hedge funds and corporate treasuries, are restricted by their charters or regulatory frameworks from directly holding Bitcoin. ETFs provide a compliant pathway for these entities to invest in Bitcoin, further driving institutional adoption and integrating Bitcoin into the broader financial system.
What's happened with the ETFs is they've massively scaled it. They've driven the trading of Bitcoin, the transactions up. They've drawn huge pools of capital into the network. They have normalized it. They've created lots of political support for Bitcoin. And they solve a bunch of problems. They're applications of Bitcoin that solve problems that impair adoption. One problem that they solve is convenience. There are a lot of people where, like, you could pick up the phone and say, I want you to buy $22 million of Bitcoin over the next 6 hours at the average VWAP price. And you're going to execute that in, I don't know, 5,000 individual transactions. You can do that in 10 seconds with an ETF and without putting up any money, you know? Whereas before the ETFs, that would have taken 6 months to set up all those accounts, and you'd have to sit at your computer. And the people that can actually do that have the money, they don't have the computer skills, right? You know, you're 22, you can probably trade it at a computer. When you're 73 years old and you've got the 20 million bucks, you can do this. Hey, Bob, buy $20 million worth of Bitcoin via iBit, click. That's what you can do. So they solve the convenience problem, they solve the access problem, but they also solve a custody problem. That person doesn't want a custody. You know, the 65-year-old person, they don't want a custody. Like I don't want to be kidnapped. Yeah, you think that you think that I want to go on television and say, yeah, I've all my Bitcoin. It's like, you know, and this key around my neck here, please don't kidnap me, right? I mean, those people don't, you know, you want to have it with an institutional custodian, right? And so it solves the problem of custody, but then it solves the third problem, which is compliance and capital controls. There are a lot of companies. Let's take Millennium, right? They have $2 billion of Bitcoin via iBit, via these ETFs, $2 billion, okay? They couldn't buy the underlying Bitcoin if they wanted to. They don't by their charter. It wouldn't meet their compliance rules. So they can either buy $2 billion worth of wrapped Bitcoin, or they can buy zero. It's very black and white. 2 billion, zero. You can be obstinate.
Saylor's vision extends to the potential integration of Bitcoin with major tech platforms like Apple and Google. He imagines a future where Bitcoin transactions are seamlessly integrated into everyday technology, allowing billions of transactions to occur daily through user-friendly interfaces. This widespread adoption could lead to unprecedented levels of transaction volume and network activity. In conclusion, Michael Saylor presents a comprehensive and optimistic view of Bitcoin's future. His insights highlight the multifaceted growth of the Bitcoin ecosystem, driven by the interplay between self-custody, Bitcoin banks, Layer 2 and 3 solutions, and the transformative impact of Bitcoin ETF. As these elements continue to develop, they will collectively enhance Bitcoin's scalability, accessibility, and integration into the global financial system. Please like and subscribe my channel.